Dumelang. Let us look at information relating to Mazibuko Limited or Mazibuko Solutions Limited. Now, that is your starting point. You need to identify the name of your business so that you know who you are. You need to remember that when you prepare any financial records, you're preparing it on behalf of the business. You are the accountant of that specific business. And for this question, you are the accountant of Mazibuko Solutions. And Mazibuko Solutions Limited is a South African listed company with authorized share capital of 4 million. Normally, that information, I will write it in my ordinary share capital note. And under authorized shares, it doesn't have a rand value. This is the maximum number of shares that may be issued, that can be issued. And Mazibuko sells and services alternative energy components to the public. I think that is because of load shedding. And they say they add a markup, a standard markup of 150% on the cost of all goods. The financial year end is the 28th of February. That is key, guys. Okay, that is key. It means that the beginning of the financial year will be the 1st of March 2022. And then they gave us the extracted balances from the financial statements on the 28th of February 2022. Note that the 28th of February 2022 is the end of the previous financial year. Ultimately, it is the beginning of the current financial year. Under the financial position section or the balance sheet section, they gave us our ordinary share capital. The number of shares issued will be 2,750,000, and the ordinary share capital that goes with that will be 17,875,000. They gave us the opening retained income. I don't know if we will need that. And they gave us our current assets. But for our current assets, you will notice that trading stock is missing, but we also have provision for bad debts, which is 617,750. That is interesting, as that will indicate to us whether if our provision is less than that for the current year, we'll have provision for bad debts adjustment and expenses. If our provision for bad debts for the current year, the one that we calculate, is more than that, if it's less, it means that our provision for bad debts adjustment will be under income, because the correct one is the one that we calculated. So we need to bring that one down. So when you bring it down, it's income. When we take it up, that is when our provision for the current year is more than that provision. It will be an expense. The difference will be an expense. And don't write it as provision for bad debts. You write it as provision for bad debts adjustment. Okay, provision for bad debts adjustment. Remember that. Then it gave us current liabilities, creditors control, and income received in advance. That is a concern, actually. This income received in advance, it relates to fee income. Instead of jumping it, I will go to normally income received in advance. You will get it in trade and other payables. And in trade and other payables, you got it there. That is a concern because it's not supposed to be there. It relates to income received in advance for last year. We needed to have reversed that already because it was a current liability. A current liability, it's a liability that must be settled within 12 months. It's way beyond 12 months. It was supposed to have been reversed, so we have to reverse it by debiting income received in advance, meaning that we subtract 4,000 from income received in advance, but at the same time, we will add it to fee income and the other operating income. And the reason why we are going to do that is because last year that was subtracted from income, but this year it is income. So we need to add it to this year's income. Is it making sense? I hope it is making sense. As I've said, that amount must be subtracted from trade and other payables. So our income received in advance, we can't have income received in advance of the previous year. We need to take it out, okay? And at the same time, we will need to add that 4,000 to our current year fee income. And that amount, you will get it under operating income. It's just a reversal entry. And I hope you get it. Okay, so from this, I'm going to subtract the 4,000 Rand, but that 4,000 Rand, I will add it under fee income, which you will find under operating income. It is income for the current year, it wasn't income for last year. So we have performed the service already, resulting in us earning that income received in advance or deferred income. Right? Good? Great. Let's move on. Now, I will go to the balance sheet for this year. We don't have trading stock for this year. We have debtors control, bank, sales, income tax. I might use that. If it's on the debit side, it means those are your provisional payments for the current year. We've got loans, ZZ Bank, we have creditors control for this year. That must go to trade and other payables. And under sales, we've got 78,750, which is included already in the statement of profit or loss. We've got cost of sales, which is also in the statement of profit or loss. Now we have this 393,250. That 393,250, we need to subtract it from sales. So debtors allowances that appear in the trial balance, you take that amount, you subtract it from sales immediately. All right. And they gave us fee income, which is 1,140,000. They gave us consumable stores. They gave us ordinary share dividends. These are interim dividends. If I was asked for retained income, I was going to write them under interim dividends in my retained income note. Note that. Good. And let's go to, so basically I've recorded everything here. Let's just go to our additional information. They say that we issued 750,000 shares on the 31st of July 2022 at 10 Rand. Now to get the share capital of that, we'll just take 750,000 multiplied by 10 Rand, and that'll give you 7.5 million. Normally, if we had ordinary share capital, I will record it in my ordinary share capital note. On the 2nd of January 2023, we bought back 150,000 shares. Now, that is a cause for concern, as those 150,000 shares, we needed to subtract them from our ordinary share capital. But we can only subtract them at EPS, which is your average price per share. And they gave us the amount that was paid, which is 1,710,000. If I was asked for the cash flow statement, I will put that under financing activities as the buyback of shares, and I'll put it in brackets. It's a cash outflow, right? But please note that it doesn't go to retained income. It doesn't go to ordinary share capital. The money that we paid for the buyback, it doesn't go to retained income. It doesn't go to ordinary share capital. It goes to the cash flow statement, or you subtract it from bank if it was not subtracted from bank. You got that? To ordinary share capital, we need APPS. Okay, I think I can calculate APPS. Okay, I don't know what I'm giving here. According to the question, I will need some calculations. Now, to calculate APPS, I will start with my ordinary share capital, which was given to me at the beginning of the year. That was 17,878,000. The shares that go with that will be 2,750,000. Now, in the numerator, I will put in the share capital that I got by issuing shares, because we issued shares just before the buyback. So APPS is the shares issued just before the buyback. It's your share capital before the buyback divided by the number of shares issued just before the buyback, okay? And our share capital just before the buyback, which was fresh, which was new, it is 7,500,000, and the shares issued that go with that will be 750, and this will give you your APS, which is 7.25 Rand. Normally, you will use that to calculate how much your ordinary share capital must decrease by. And I think when it comes to shares, this is the only question that they asked. Know that ordinary share capital increases on the credit side. It's obvious because it's capital. Please watch my grade 9 videos where I explained it thoroughly. Capital increases on the credit side. Now, if it decreases on the debit side. So ordinary share capital will only decrease at cost price. And when it comes to the buyback of shares, the average price that we calculated is considered to be the cost price. But we paid for this, so bank decreased by the amount. But it will decrease by the average cost price, which is the number of shares bought back multiplied by EPS, and that will give you 1,087,500. At the same time, we made a loss here. When you look at this, these shares were bought back at 1 million. They were bought back at 1,710,000. I hope I remember that number very well. It was 1,710,000. So we paid 1,710,000, right? But initially for these shares, we only received 1,087,500. So we paid more than what we actually received initially, and we made a loss of 622,500. That 1 million is the one that I said will be taken. Normally, you will deduct it from bank, or you will take it to financing activities and write it as the buyback of shares, and you'll put that in brackets, right? And so for me to calculate the loss will go to retained income. Retained income loss reduces retained income. The loss due to buyback reduces retained income, and retained income decreases on the debit side. And obviously you will credit bank, which will make up that 1,710,000. When you add it with whatever the loss is, when you add it with that 1,087,500, it'll give you 1,710,000. And to get that loss, you will take the buyback price minus the EPS. If the buyback price, BBP, is minus EPS, I mean, it's bigger than EPS, you made a loss. Okay, if BBP is bigger than EPS, you made a loss. BBP stands for buyback price. Here, the buyback price was 1,710,000. You minus 1,087,500. We would have made a loss of 622,500. 8 marks, just like that. Now, check out my videos. They are, I think they are written ordinary shares and dividends, where I actually did this table. I'm surprised that someone actually did this table because I just came up with this table around 5 years ago. I guess great minds think alike. I think the examiner of this paper was Andrew. I think it was Andrew. So I guess we think alike. This is how I teach my buyback of shares. And if you watch the videos, you will notice this is how I taught it. I never thought it will be examined, and it was examined. Interestingly, it was examined. I hope my students got it right. Okay. But hey, I can only do so much after all. Anyway, let's go to additional information and adjustments that still need to be taken into account. They say that telephone account for February 2023 totaling 12,500 had been received. When they say account, they're telling you it's a statement that says this is how much you owe towards the telephone. This is how much you have actually, how much your expense for that month is, but you did not pay. And the fact that you did not pay it, it means that the telephone amount that is reflected in the trial balance, or the one that it was not reflected in the trial balance. I think it was reflected in your statement of profit or loss and the other operating expenses. That 132,600 does not include the February account or amount that you used. Okay, the airtime that you used for February is not included in that 132,600 because that 132,600, it is actually what you have paid. Now watch my grade 9 videos where I explain from the journals, from the source documents until it goes to the ledger, from the ledger it goes to the trial balance, okay? So for telephone, this comes from the CPJ. So this is what we have actually paid. And in the income statement, we only include expenses we have incurred, not the ones that we have paid. So that 132,600 is not an actual expense. It's actually understated. It is understated by 12,500, which is the airtime. Now we call it airtime, the telephone airtime we used for February. All right, we used it, but we have not yet paid for it. Now, taking our telephone expense to 145,100, but that expense of 12,500 for February, we have used it, but we have not paid for it. Therefore, it is a liability, and the liability must be recorded under current liabilities in trade and other payables, and we are going to record it there as accrued expense, which is 12,500. That's it. Done. All right, let us move to the next one. I have made a video on this with my students, obviously. You can always, I'm just giving you different ways of explaining, all right? Now I've got number 2, it says the insurance expense. Here, guys, it's an expense. You don't even have to hesitate. So you take it straight. This is your actual expense. You take it straight to your expenses in your income statement or the statement of profit or loss. It's for your insurance. And you will notice that according to your operating expenses, your insurance expense is supposed to be 96,450. That's what we have paid for. It means we overpaid, and we overpaid. We need to reduce the overpayment by 8,250 because our actual expense is supposed to be 88,200. That is our actual expense. That 8,250, I got it by taking 96,450 minus 88,200. That 8,250 is what we have already paid for in advance towards our insurance expense, and it qualifies to be a prepaid expense. A prepaid expense will be recorded in trade and other receivables as such. Done again. Easy, guys. Easy peasy, lemon squeezy. Let us move on to the next one. What does it hold for us? It says that the bookkeeper forgot to reverse the income received in advance at the start of the year for fee income. We have sorted that one out, guys. Quickly, we dealt with it nicely. We done with it, right? And adjustment 4, it says that a service was done for a cash customer in February. Yup. The customer showed a proof of payment statement to the technician, but no entry was made in the books of the business. So it means that our fee income is understated. By how much? I don't know. On investigation, it was discovered that the payment never went through. So we never actually received the payment. And Mazibuko Solutions Limited is still owed that fee. So that 6,000, I'm going to add it to my fee income because we performed the service. Guys, we did a service from grade 9. You know, when we do a service, it's fee income. We are going to add that 6,000 to our fee income in the statement of profit or loss. Okay, we performed the service for it, we earned it, and it'll take our fee income up to 1,150,000. But that 6,000 was not paid for, so it's accrued income. And accrued income will be recorded in trade and other receivables as such. I don't think we're gonna have another accrued income. Done with that. It is owed to us. We performed the service. They said we received the payment, but we did not receive the payment. What if the payment, we erroneously recorded it, but only to find that on investigations that it was not supposed to have been recorded. So you wouldn't subtract it from your fee. I mean, you wouldn't add it to your fee income because already it's added, but you will subtract it from bank and add it as accrued income in trade and other receivables. That is if they told you that it was already recorded, but later on investigation, it was realized that the payment was actually not received. That doesn't affect our fee income, but it affects whether we received the money or we did not receive the money. In that case, we did not receive the money, so you're going to go to bank and subtract it from bank, and then go to trade and other receivables and record it as trade, as accrued expense. So if you were to make the journal entry there, you debit accrued expense, you credit bank. So fee income is not affected at all. Here it's affected because this entry was not recorded. No entry was made with respect to this transaction. We good? Great. And the next one says that the tenant miscalculated annual increase, okay, and has overpaid. So it means that our rent income is overpaid. So it's overstated in essence. We included the amount that was paid for, but it's not supposed to be earned. So it was not earned. So we need to subtract it. And that was rent for February was overstated by 2.5. So we need to subtract that 2.5 from rent income because it's not income. Okay, it was overpaid. And he asked that this be offset against his rent for March 2023. So they didn't ask for a refund. So meaning that they say that, oh, by the way, keep that money and then subtract it from rent for March 2023, which is the next financial year. So we're going to do the right thing here by taking the 2,500 and subtract it from our rent income. And after subtracting it from our rent income, I am going to add it to prepaid expense, which is income, not prepaid expense, deferred income, which is income received in advance. You get that in trade and other payables. You will just add it to income received in advance. We received it for March next year. Hope you get it. We still good? All right, let's move on. On to the next one. As Swiss beats always say, it says the bank statement was downloaded on the 28th of February and the following still needs to be recorded by the company. So we have bank charges of 2,500. Guys, I deal with things as they go. I will stop right there. Bank charges. So this was in the bank statement. So we didn't know about it. So if we had bank, we're going to take the 2.5 and subtract it from bank, but we will add it to our bank charges in the statement of profit or loss because we just received bank charges. You will only know about them when you receive. When you receive a bank statement, anything that is in that bank statement, you didn't know about it. You only got to find out about them when you received the bank statement. So you didn't know about them. Okay, so they were never recorded. That's why we have to record them. Obviously, that 2.5 I was subtracted from bank if I was given cash and cash equivalent, but it's not given. But if we had a bank overdraft, I was going to add it to bank overdraft because a cash outflow increases the bank overdraft. But if your bank is positive, a cash outflow decreases your bank account. If it's bank overdraft, you add it to the bank overdraft. If it's a positive bank balance, which is under cash and cash equivalent, you subtract it. Guys, that's key. All right, check out my videos on the cash flow statement, but don't forget such things. They're very, very important. I think they need to bring back the bank reconciliation. IEB needs to bring it back, okay? Because it's very, very important, especially now that I'm explaining all of this. So my bank charges will be 30,000. That is your actual expense for the year. And then let's go to the second part of that transaction. The second part of the transaction says that we have current income of 12,600. So this one, if we had a bank overdraft, it's an inflow. Okay, we're going to subtract it from bank overdraft in trade and other payables, or you will get it under current liabilities on the face of your statement of profit or loss. So you're going to subtract that. But if it's a positive bank balance that is under cash and cash equivalent, we're going to add it. Okay, so cash inflow reduces your bank overdraft, but cash inflow, if your bank is positive, it increases what you have in the bank. Got it? Guys, these things are very important. I'm giving you options of how Andrew can actually twist things around. Oh, by the way, Andrew is the guy that sets paper one. Well, he's a good guy. We're not friends though. So, but I must say this paper, I predicted, you can easily tell, I predicted this paper. PT, I don't know what happened with my grade 12s because everything that is here, because I've just done the whole paper now, and everything that is here, I've taught it thoroughly. Okay, like 6.2 there, it says that EFT payment. So we didn't know about this EFT payment. What was it for? It was for it is 85,000 for 4-month advertising. So it is for advertising contract, which started in February. So this advertising contract covers us for February, March, April, May. But here's the thing. A lot of people will normally save 85,000 times 3 over 4. And then you subtract that from your advertising without noticing that this transaction was never recorded. We didn't know about it until we downloaded the bank statement on the 28th of February. So this was not recorded. So it teaches you not to memorize. So we're not interested. Well, we are interested in the 2/4 of the 3/4. Sorry, the 3/4. We are interested in them. But we only include the quarter of that. Okay, only a quarter of 85,000 Rand must be included and added to our advertising. It means that our advertising expense has been understated by a quarter of 85,000 Rand. I don't know how much that will be. I prefer to show it as workings. And that will give us our total. I added it to advertising because it's what we incurred for that month of February. It's within the current financial year, so we need to add it. Okay, I know most of you will be like, oh, let's subtract 3/4. No, it was never included. If they said it was included, we were going to subtract 3/4. But this one was never included. So you only include what you need, which is that 1 month, which is the month of February. Okay, and that will give you 252,250. So when we talk about the general interest, because that's how I teach the income statement, I start with the general interest. You will normally debit advertising by a quarter of 85,000, and then you will debit prepaid expense because the 3/3 is what we paid for in advance because it's for the next 3 months, which is March, April, and May. Okay, and then you credit bank with a total amount of 85,000 Rand. So basically the 3/4 will go to trade in other receivables as prepaid expense, and that will give us 63,750. You add it to the existing prepaid expense, taking your prepaid expense to a total of 72,000. Nice, ne? I know, guys. Yeah, as Zulu say, ubala. Huh? All right, let's go to number 7. It says that the loan is repaid in 8 equal annual installment. Okay, whatever. So what? Okay. And then I will just highlight 8 because I don't know what to expect here. I know that we're gonna pay it annually. Okay. So this year we're gonna pay it. We're gonna pay it next year. We're gonna pay it the following year until after 8 years. That's what it means, right? And then it says on the 1st of September 2022, the company made the first. So this is in the current financial year. So we only paid one amount. We paid it on the 1st of September 2022. Interesting. The loan repayment and interest on the loan have been correctly recorded. Oh, that's great. So we don't need to calculate any interest here. And interest is not capitalized. Okay, interest is not capitalized. So how is this important if you don't have to calculate interest? How is it important? Exactly, guys. Loans are not about interest only. This tells you that if we paid 1/8 this year, next year we need to pay 1/7. Okay, so we made an installment this year, so we are still left with 7 installments. And the one of the installment, of the 7 installment, we need to make it the following year. And the one that we have to make the following year changes from being non-current, guys, to being current. And where do we find the current portion of the loan? You will find it in trade and other payables. Okay, so you just take the total loan amount. Let me check how much it is. The total loan amount, we'll find it under balance sheet or statement of financial position. It's from ZZ Bank, there it is, which is 10,500,000. I like these numbers because this is how they ask questions at university level. I hated those tens of thousands and hundreds of thousands because they're unrealistic. In real world, we deal with millions, okay? And billions, by the way. All right, we deal with millions and billions. That is when you start doing accounting at tertiary level. And obviously you will know that I always advocate for people to be chartered accountants. Guys, right now we have a shortage of around 20,000 chartered accountants. Even those that qualify to be chartered accountants, they rather opt to go and work overseas because there's more money. They rather get paid in pounds and dollars, resulting in South Africa having less accountants. Please note that chartered accountants, South African chartered accountancy is #1 in the world and is in demand because of that. In the world, by the way. Yeah, that is just information to those that always say our education system is below par. They are just hit with over par. In the world, it is the best. Okay. So I'm gonna take that 10,500,000 and divide it by 7. I mean 10,500,000. Yes, divided by 7. I will get 1.5, which is my current portion of the loan. Just like that. How? As Mazwi always said. Anyway, let's get on with it. 8, what does it say now? It says that a debtor claimed that a 5 kVA model had been installed and he had been charged for an 8 kVA. Right. I think that's a battery, by the way. It was agreed to grant him an allowance of 9,500. An allowance is just a reduction of the purchase price. And remember from grade 10, yeah, don't forget those. An allowance doesn't have cost of sales. So you'll just take that 9.5 and just subtract it from your sales, right? Okay. I don't know. For rent income, I didn't calculate the rent income for the year, which is 136,500. Let me just take that 9.5 and subtract it from sales and close sales. This is how much I will get from sales. Guys, you also close cost of sales as well, because after that, I don't think there's anything about cost of sales. Please remember, and this is to all the grade 12s, cost of sales, put it in brackets, people. In brackets, it's an expense. You put it in brackets. That's how you earn that mark. Because if you don't put it in brackets, you end up making silly mistakes. Like a lot of people will just take sales and add it with cost of sales to get gross profit. It's because you don't listen. Put it in brackets. Then you will know when you put it in brackets that you need to subtract it. So 78,247,250 minus 31,460,000 will give you a gross profit of 46,787,250. Okay, and they didn't ask us to calculate operating income. Just leave it like that. Done, dusted. All right, with Mr. Me. Let's go to the next one. Oh, by the way, that was a debtor. How can I forget that it goes to trade and other receivables? We need to subtract it from debtors control. Okay, I got it under control, right? We good. Awesome. Let us move on. The next one, what does it say? It says that Tato Transistors, who is both a customer and a supplier, overpaid. Okay, I get that. And when they overpaid, it means that they're gonna go in. Since it's a customer, they're paying us, it means that our debtors control will be negative, and we can't have a negative debtors control. So we need to, let me see, they requested that the debit balance of 2,000 in their creditors ledger account be transferred to their debtors ledger account. Okay. Oh, we are the ones that overpaid them. Interesting. So they changed from being a creditor to being a debtor. Interesting indeed. Okay, so it means that in our creditors ledger, Tato Transistors is shown as a negative amount. So we need to go to our creditors controlling trading other payables and add that 2,000 Rand and then change them to debtors. So we're going to go to trade and other receivables and also add it to debtors control. Okay. So the addition in creditors, because someone might be saying, but why don't we subtract it from creditors control? No, it's because already it was in creditors control with a negative amount. So to cancel that negative 2,000, we add it back. So the net effect is 0. And now we do the right thing by adding it in debtors control. General journal, guys. Check my general journal videos for grade 10s. It is there. Okay, we good? Awesome. All right. Okay, let me just finish this quickly. Okay, it says provision for bad debts must be adjusted to 529,215. So last year's provision was overstated, so we need to bring it down. A reduction of provision is income, therefore the difference must be recorded under operating income as provision for bad debts adjustment. Okay, we good. 2 marks for that. It'll be 88,535. Okay, we're still good. All right. Okay, I'm done with these ones. Let's go to the next one. It says that the following financial indicators were calculated on the 28th of February 2022. They gave us the current ratio, which is 2.3:1, and asset test ratio of 1.2:1. I don't know why those are given to us. Okay. Okay. Let me just check why they're given to us. I'm just gonna randomly check. Oh, it's because they want us to calculate trading stock. Of the two ratios, asset test ratio and current ratio, which one has trading stock? It is the asset test ratio. And what is the formula for calculating asset test ratio? Current assets minus inventory is to current liabilities. That is correct. Do we have current assets for this year? How much are they? First of all, I need to check. They want us to calculate trading stock for when exactly? They want us to calculate trading stock for when exactly? Can I just check? Oh, these ones are for last year. Oh, so that's good because I was like, for this year, we don't have current assets. We also don't have current liabilities. That just gave us an extra, which doesn't really help us. It didn't give us all our current liabilities and current assets. So if we have to calculate trading stock for last year, and then that is good because now we can actually use this, all right? And this is all they said, really. And how are we supposed to know that you need to calculate trading stock for last year? Okay, they were supposed to have told us that we need to calculate trading stock for last year, unless I'm getting something wrong here. All right. And now to calculate trading stock for last year, and I noticed that we also don't have trading stock for this year, I'm going to use last year's information because I believe that they gave it to us. So they gave us current assets, good, and they also gave us current liabilities, which is good. So they want us to calculate that. They don't want us to calculate the one for this year, which is still good, right? Great. I don't know where this is going. So, because I'm just going to calculate trading stock because I don't know what is going on here. Do they want us to calculate trading stock for this year? It's impossible. That's what I can tell you. From the information I have right now, it is impossible. So I'm just going to calculate trading stock for last year and see where it takes me to. Okay, but probably you would have browsed through the paper and you will have an idea of what you need to do. So I'm going to use those. So I know that my current ratio will be that 83,950,000 minus X, because I don't have inventory for last year, is to 36,500,000, right? But we were given the asset test ratio for last year, which is this 1.2:1. You cross multiply and you will have 36,500,000 will give you 43,800,000. And when you take 83,950,000 and you times it by 1, it'll give you 83,950,000 minus X. Okay, so it's 83,950,000 minus X times 1. It is 83,950,000 minus 1. I mean minus X. It remains the same. Okay. And now once I have this, you just transport it, simple linear equation from grade 8. You just take 83,950,000 to the other side. You subtract it, you will get 40,150,000. You divide by negative, it gives you that. So this is our trading stock for last year. Okay. I don't know what they want us to do here. So I just calculated that I'll leave it there because I saw workings for trading stocks. So I'll just leave it there until I get more information. Let me just check the more information, what they say. They say the net movement of stock consisting of all purchases, sales, and returns resulted in opening balance being increased. So that was an opening balance. So we're going to increase it by 4.5 million for us to determine the trading stock for this year. So you will just add that to the opening balance that we just calculated, and it'll give you trading stock for this year. Okay, I'll just leave it there until I get more information. So my trading stock at the end of the year, when I add them here, it'll give me 44,650,000, unless there's something else I'm missing. Let me just continue with my adjustment. Me, I'm dealing with each adjustment. I don't act crazy. Oh, and then they say we have trading stock deficit. Wow. So trading stock deficit, we debit trading stock deficit. It goes under operating expenses. So we're going to put it under operating expenses as such, trading stock deficit. And when we put it under operating, or I did operating income, I don't know why I didn't do it here. So I'm going to have trading stock deficit and I'll put it under operating expenses. But we debit trading stock deficit and then we credit the actual trading stock. So I'm going to go to my trading stock that I just calculated and subtract trading stock deficit from it, so that I can get the correct value of trading stock at the end of 2023, which is 42,525,000. I guess that's it about trading stock. I don't want to go back to that. This was very depressing, don't you think? And then it says, oh, that's it actually. And then it says 11.4. It was discovered that an employee had stolen 15,000 worth of diesel, which is consumable stores, in February. This was not insured. The fact that it was not insured, guys, I take it as a loss. Straight under operating expenses, you put it as loss due to theft. Don't even waste your time. Okay, the part that was not owed. Look what they did. You first subtracted from your consumable stores, okay? And then you put it as a loss due to theft. Just need to adjust something here quickly. Okay, I don't want my things to be all over, right? So this is, okay. This is what I wanted to start with, okay. I wanted to start with recording it as a loss due to theft, right? Loss due to theft. The whole thing is a loss. And then you go to your consumables. It means your consumable expense, because these are consumables that we bought. Okay, they need to decrease by what we lost to get the actual expense. So we'll decrease it by 15,000 and leave it there. Move on afterwards. Just move on, move on, move on, move on. Don't have time to waste. Guys, deal with each transaction. Don't go around. Then they say, according to the physical stock count on the 28th of February, we reveal that we have 23,000 worth of consumable stores, which is diesel. Someone is like, oh, how did we count diesel? Guys, they put, if you go to a petrol station, you will notice that sometimes they put, I don't know if it's a tape or a stick, they put it into, when you're in a petrol station, just look around, guys. On the ground, you will see things that are closed. They look like sewage. It's not actually a sewage. It's where they keep petrol. I think they put a stick there, all right, to check how much petrol or diesel. In this case, I don't know where we're gonna keep it. But obviously there must be a way of measuring what's in there. And obviously you know what the diesel price is right now. So you will just multiply it by the diesel price to determine the value of diesel that is still there. Note that the diesel that is not used, we cannot recognize it as an expense. Instead, we're going to subtract that from our consumable stores, which is 23,000. So we're going to subtract that from our consumable stores, right? Subtract 23,000 and then you get your consumable stores expense. But that 23,000 is consumable stores on hand. So it'll go under inventory together with what we've just calculated right now. There they are. We good? You sure? Sure. Easy, right? Take it easy too, because it's that easy. Nothing is complex here, guys. Accounting is quite easy. Don't forget to let others know that there's this cool channel that will help you pass accounting. Okay, don't be stingy, don't be greedy. Just share. Sharing is caring, guys. Okay, and you will help me make more videos. All right. So don't hold on to this to yourself. Just share. All right. And then they say that, oh, we're nearly done, finally. And then they say income tax is calculated at 30% of profits. I'm just going to do that. Just take my profits before tax, multiply it by 30%. It'll give me my taxation subtracted to get my net profit done. But that 3,240,000 is my income tax expense. Go to adjustments for income tax. You will notice that I highlighted in our pre-adjustment trial balance that we've got provision for, not provision, I mean sales income tax of 2,300,000. So it's less than the actual tax expense, meaning that we still owe sales the difference. And that difference we owe sales, you're going to put it in trade and other payables as, let me just find the totals for the first one. We're going to put it here as, why did I start with that? Okay. Can I just correct something quickly again? We're going to record it there as sales income tax. Okay, we're going to record it in trade and other payables as sales income tax, because that's what we are owing. Our income tax is more than provisional payments. Okay, when you see sales income tax under pre-adjustment trial balance, just remember that represents provisional payments that we have made throughout the financial year. So they are less than our actual tax expense. So we still need to top it up within the next 7 months. And that's why we're going to include the difference in trade and other payables. You're listening, right? And it's getting through, right? Good. There's no data taking here, all right? So that's what we're going to have, okay? Done. Next one, which is the last one, guys. This is so exciting, don't you think? Let's go to the last one. It says on the 28th of February 2023, the company declared a final dividend of 30 cents on all shares issued. Oh, by now you know how many shares we issued, right? It is that denominator over there, but we just have to subtract 150, which is the shares bought back. And whatever you get there, you times it by 30 cents, right? And that will give you shareholders for dividends. Final dividends, you'll put them in trade and other payables. Smart, innit? I know. Now you just put it there. There we go. You're done. Sorted. Great. Easy, guys. Getting a distinction here, it's easy. Just watch all the videos. Download all the worksheets. Work on those worksheets. Okay, it's easy. I'm simply using the knowledge that I gained through teaching. That's why I'm doing it. And I haven't been teaching accounting for that long, guys. It's been 5 years. Okay. And ever since I started teaching accounting, I just apply the notes that I use in my handouts. Get the notes, watch the videos, and complete the notes, and then try your past papers. You will see. Try me. Okay, you will see a distinction is guaranteed. Try this one out. Watch videos on the cash flow statement and try this one out. This is what you've got. Okay. And this here. This is the 2023 November exam. So you can just download it and just start answering it and keep on checking those videos. All right. Yeah, Mia, you said I don't finish videos. Here it is. It is done. So no excuses. 100% from now on. It's Mia and Ziki. My grade 11s, they always complain that I don't finish videos. I'm done. I'm trying to make sure that no one has an excuse for failing my subject. Guys, accounting is quite easy. I need you to be serious. Okay. And guys, just get paid. All right. It'll be a blessing if I actually get someone to be in the top 10 of the board exam. That'll be very exciting. Okay. I don't know why it's easy for science teachers to say they want to produce physicists and engineers, but when an accounting teacher says they want to produce a chartered accountant, it's a big issue. And you even told that you don't need accounting to do chartered accountants. You need it. It makes it easy for you. Trust me. Stop listening to people out there. Anyway. Anyway, I don't know what to say anymore, guys. I guess this is it for me. Let me just take 2 laps. Oh, by the way, guys, you must come to my school, Veritas College, Dawnpark. Teachers will be playing against grade 12s on the 5th of April. So I'll be there. Hey, yeah, jersey number 10. Upeni wala tata wale ni marathon. O marathon wale ni kutomason. Manje selugcibe yimi. Yeah, Mr. Teacher Man. Yeah, come and check us out on the 5th of April. Is it the 12th or the 5th of April? I think it's the 5th of April. Yes, it's the 5th of next week, Friday. Okay, come and check us play. Check us out play at Veritas Grounds. It's only 20 rand entrance fee. Yeah, please join us, guys. Okay, come and support. All right. Thank you for watching again. Enjoy a long weekend. Kgotsong.